Welcome everyone to Flip the Script, what banks don't want you to know about your money. I'm so excited you're here because what we're about to cover could literally change how you build wealth for the rest of your life. My name is Zara York, and I'm a financial professional with ILN and a real estate consultant with Fathom Realty. I specialize in helping people not just earn income, but grow it, protect it, and use it as a tool to create generational wealth. I love helping families flip the script on outdated money beliefs and start thinking like the 1%. And I'm not doing this alone. We have a power team with us tonight. So, first up, please help me welcome Gisela Menjivar. She is a financial professional with ILM, and she's been helping individuals and families understand powerful wealth strategies like IULs, annuities, and tax advantage planning. She brings the heart and the knowledge, and she's a key player in helping people reclaim control over their money. So, welcome, Gisela. Thank you for being here. I just introduced you.
I'm excited to be here. Super excited, Zara. As you know, in the last 20 years that I've been doing this, for me to talk about financial freedom, financial literacy, anything that has to do with empowering families, individuals into believing that there is obviously, potential to grow money rather than work for money all your life is a big deal for me. So I'm excited to be here with all of you.
Awesome. I'm going to introduce someone else. So she's joining us as well. And she's amazing, Diana Flynn. She's a loan officer with NFM Lending. And she's here to share some real talk on how lending, equity, and smart financing can be well-building tool, especially when used alongside the right financial products. She works every day with homeowners and buyers looking to level up financially and create freedom to real estate. Welcome, Diana.
Hi.
Thank you for being here.
Thank you for having me. I'm really excited to be here. And I do mortgages. I help first-time home buyers, second-time home buyers, and I also help people use equity in their home to leverage other financial investments. So I'm happy to be here.
Awesome. I'm going to introduce someone that's joining us today. They're a couple, wonderful couple, Dion Mitchell and Sherry Mitchell. They've been clients, but they also joined our team. So, welcome, Dion and Sherry.
Hello.
How y'all doing?
Awesome. I'm so happy you're here. This is awesome.
Yeah, it's a great day to learn something about finances.
And it's a wonderful morning. So I'm going to start with a question that I think is important, and then we can open up the topic. So, why do you think most people feel stuck financially, even when they're doing everything right, saving, budgeting, working so hard, etc.?
So, I really feel that many people want to do better in money. I don't think anybody, if I went into started asking at, at the corner of the street as a sensitive said, hey, do you want to be lousy in money? Everybody would say, yes, please. I love to be lousy in money. What it is, I think, is mostly, why do you need to have a map to get anywhere that you've never been there, right? Because you would be lost without it. And that's exactly what not understanding money, not having, someone that's guiding you, that helping you through it is so important. And the problem a lot that I have seen in the middle class, especially within middle class and, lower class families, is that they don't see the essential of having a financial agent in their life. I mean, think about it. You have everything else from an, tax guy, your mechanic guy, the person that does your hair, your nails. I mean, there's somebody, right? But there's not that person that you can go to for your finances. And I mean, nobody has any idea who could actually guide them besides the banks, right? And I know we're going to talk about that in a minute, but in all honesty, I feel that the lack of guidance, the lack of financial GPS, right, is what's really hurt our middle class families for too long. And that's something that we want to, change. Obviously, with ILN, we're all about making sure that people structure their financial, well-being with a strategy and taking action on it as soon as possible. So Zara, that is really the main goal, is to have someone in your family, if not licensed in your family, because this is why we really are so excited, right, to bring on board more people into our industry. But at least someone that you can trust, that you can start talking about money matters. What do you think?
What do you think, Diana?
I agree with everything that you're saying. I feel like people have a hard time also just like getting ahead. It's like, oh, I have to pay my rent. I can't build the savings, or my car broke down. I have to pay for that now. So it's like people have a hard time getting ahead and just managing their money. I mean, I see it every day on people's like credit reports. It's like, why do you have a $950 car payment? Like, why? Just why? Like, I don't even have a car payment like that because, I mean, we know as financial people, like a car is a depreciating asset. Like there's really no reason for that, especially if you can't afford it. So people have a hard time getting ahead and they spend their money on the wrong things. It's like, oh, you don't want to have a $1,500 mortgage payment, but you're okay with having almost a $1,000 car payment. Like it's just backwards. People don't get it and they're not taught. I think that, we were, well, I was lucky enough to grow up in a family where like my parents taught me that, but not everyone is in that situation. And you guys are probably in the same boat too. It's like we either taught ourselves or we grew up learning that from our parents. So not everyone is that way. So,
and that brings me to say, like, we don't choose where we come from, but we can choose where we're going. So
right.
Yeah, and that's something that we need to learn. So a lot of people live from paycheck to paycheck, but they don't know where to allocate their money. It's not about just earning. You actually want to get to a point where your money is increasing while you're doing nothing. You cannot keep it changing time for money. So, but that I'm going to ask Dion, because Dion and Sherry said Dion just, I want to congratulate Dion because he just recently got licensed. So congratulations to him for that.
Thank you.
And he was client, and then he joined the team. He joined ILM just recently. So what do you think, Dion, about just, when you acquired your accounts and then joining ILM? What was the change for you, and what was your experience throughout all of this?
So the biggest thing for me was not knowing. I've had, the regular term insurance and stuff, just the old world, I guess, thinking, get term and invest the rest. It's kind of what I was told way back when. And I didn't really know that insurance kind of evolved the way it has. And there is a lot more products out there to help people get wealthy, or at least have set their financial path on the right path. I also think that when it comes to people and finances, people are pretty much tight-lipped. Nobody really kind of wants to let everybody know how they're actually doing financially. So I think you have these, especially in families, you have people that don't want to talk about money. So I think that coupled with the fact that a lot of people don't really know where to go or know what to do, makes them, not want to actually face the facts of what their finances look like.
It's kind of a taboo. Yeah.
Yeah.
It's kind of
So
a taboo.
For me, it was just, there were some things that happened in the past. My brother passed a few years ago. And when we went to go look at his stuff, to bury him and all that stuff, he had no insurance. And it was kind of hard on everybody else because we're going through the grieving process and knowing that there's no way to, bury my brother. So I had to wind up, coming out of my pocket to pay for his funeral. and funeral expenses. What that basically, that kind of opened my eyes up to like, okay, I need to start looking at insurance. I need to start worrying about the future. And that's kind of how I evolved to getting the products and now joining the business, because I know there's other people out there just like my brother.
And you can, we can help and teach people, how to manage their finances, and then buy a house, and then get all the things they want to get, and not get cut off on when you, like, for me as a real estate agent, I see a lot of people trying to buy property, and I know Diana knows this. It's like when you get all these clients and you see their bank statements, you see all things that all their assets is all over the place. So I'm going to ask this question to Diana. So can you explain how banks use our deposits and what kind of returns they're getting on our money?
Yeah. So like when we deposit money into the bank, like into our checking and savings account, the bank doesn't just like hold it there, like in like a vault. They use that money to, they lend it and like invest it. So essentially so they take the deposits, and they'll offer loans to other people at a higher interest rate, typically, between 6 to 10%. Mortgage rates are like 7%, but I do see some over 10%, especially if it's like a non-QM loan or like a DSCR loan. So that's how they're making money off of our money.
So that's interesting.
Yeah.
So wait,
Yeah.
So let's say you get a client, and then they get a loan at 6.5%.
Yeah.
Let's say $250,000, because that's what the cost. That's what they're buying. That's what they need to buy the property.
Right.
That bank is going to use that money to sell that debt.
Yep.
At a higher rate percentage.
Correct.
Yeah. Which is yeah.
And they're profiting, that percentage. So, and they're only like, when our money's sitting in that account, like we're making maybe like 1 to 2% off of it, and they're profiting that additional, because they're charging then 7 to 10%. So, which is crazy. So, yeah.
And they're getting nothing.
That's how it works. So, yeah.
Oh my gosh. And when you hear it this way, and I know those that are listening to us, through all social media and all that we're feeding this great information. And when you talk about it, right, ladies, like we suddenly feel almost uncomfortable also as well, though we know this, that it's really common sense, right? Why didn't we catch it before, and why don't people catch it? It's because we don't talk about it. We don't have those conversations at home. Even since, young adulthood, we didn't even have our parents speak much about it. Like we didn't have this over dinner, right? This wasn't our kitchen, on the counter hey, how do banks work? Or how does real estate work, right? But now I'm 52. I wish I had known. Right, Diana? Like, I wish that I would have searched it or found it somewhere and understood, as in a very young age, how does interest work? How does the mortgage lending work? I want to own a home. I mean, you ask any young adult today, they all say yes to owning a property, right? They all want to be able to live outside of their house, of their parents, but we don't prepare them. Right. So we don't prepare anyone really for finance at all.
No, that's not something that is taught. Yeah. It's not.
No, it's not taught. And like, even I think about it, it's like, okay, we're all taught to go to college, and then, they make us take these classes, like these science classes and these art classes that are like required. I'm just like, where's the required like finance course? Like you have to be like wanting to, I have a finance degree, so that's why I learned finance, but we almost don't even like learn the things that actually matter sometimes, even in those classes. Like we're learning crazy things that I'm like, when am I ever going to need this? Like this crazy equation, like why don't we teach young people how to like manage their finances? Like, don't go buy an expensive vehicle with a really high payment. Like contribute to your 401k as soon as you can. Like that's what forced me to start saving. Like I didn't even know it was coming out of my paycheck. Like I just have a certain percentage coming out every single month, and I see it grow every single month, and I'm so glad I did that. But people aren't taught that, so.
And people keep using paycheck. No, they like I said, they just keep using paycheck to paycheck and then burning money, and they don't even know what they're doing with. So they get paid a week, bi-weekly, and then they start just using the debit card, and then all of a sudden, they just, oh my God, I don't have money. I have to wait until the next time I get paid. Like, what do you do with the money? You don't keep track of those things. So one thing that I see, especially in this country, is like you get rewarded for debt, which is really interesting. So, so why do you think the system seems to reward that more than savings? That's a good question.
Yeah, I think it is too, and it's because debt really fuels like the economy in a way, and then the government and banks benefit from debt. So like that's why I feel like we almost not we, but like to get a mortgage, you need to have debt. Like you need to have a credit score, which is weird. I mean, I actually have no credit loans now, which is kind of cool. I could probably talk about that at a different time, but it's almost like you have to have debt and a credit score in order to get a mortgage. And then sometimes I go through underwriting, or I send a file through automated underwriting, and they're like, I'm sorry, but their credit history is too thin. I'm like, no, we're gonna I don't know, we're not going to give this person a mortgage because they don't have debt. It seems kind of messed up in a way.
Wow. That is so true. Diana, you hit it right on the nail. Girl, that is so true.
So what happened? You guys are homeowners, right, Dia and Terry? So in a nutshell, how was that process when you guys applied?
You want to explain it? Or I'll explain it.
It was a bit overwhelming because of it being our first experience with it, but all of the terminology and all of that, and with it being a long process, they didn't really have time to really explain it in layman's terms that I could understand. All I know is we're signing this stack of paper that's as big as a phone book. To attain this property. And it was just more, I had to focus on the excitement because it's like, okay, well, we have to fill this. This is a legal document. This is a contract that we have to sign, and we want this. But at the same time, just like Diana said, they should have had, and they should have that as a part of, even if it's in high school, because us being older, we had home economics, but it was just telling you how to be a housewife. It didn't include finance. It was just how to cook, how to clean up the house, and do things like that. Then there were other people that I knew that went into economics, and it gave them a little bit of a introduction to finance, but not enough. Not, as Diana said, to put you out there for the real world. It's just, oh yes, you got to go to college, get good grades, get a job, work 40 years. So our experience with it was a little bit overwhelming, but I'm glad that we did experience it. As far as to say, yes, we kind of know, we know how this process is supposed to go initially.
And I will say, and just quickly add that the overwhelming factor is a big part of it, but the credit side and the debt ratio that they want you to attain to be able to say, oh yes, now we'll approve you. It's kind of crazy. We had to like pay off a little bit more debt. Don't buy nothing,
but don't pay all of it off.
Yeah, but don't pay it all off. But get this little bit. You need some, and it was a very interesting process. I will say that.
Yeah,
it's just really interesting numbers, and because they really want you to stay in debt, and somehow they want you to owe money. Like Diana said from the very beginning, banks make money out of lending money. So this is, and it's a good investment. I think buying real estate, I'm in real estate, it is a good investment. Just you have to know the process, and you have to understand, and you have someone that guides you through it. But because this is how you make money out of property, right? Equity. But people make a lot of mistakes with that. So real quick, Diana, so what's a common mistake homeowners make when it comes to using their home equity?
Well, I had someone take out a HELOC to buy a car. I'm like, no, no, why are we doing that? Like,
Okay.
you need to take equity out of your house if you like to do like home improvement. So to like increase the equity in your house, or use that money to go toward like other investments, right? That's going to grow your money that way. Like, you don't want to be taking a home equity loan or home equity line out on your house to like do things that aren't going to like increase your wealth, right? Because then it doesn't make sense, and you're eating the equity out of your house for no reason to go buy a car, or like, oh, I'll go buy a Gucci bag or something like that. I see a lot of people do it for home improvements. Like, that's good. You can do a home equity loan for home improvements. It'll increase the value of your home, or use that money to go into other investment vehicles to make more money off of that money. So I saw people do that when rates were really low. So they'll take, they'll do a cash out refi or do a HELOC and then put that money then into an investment growing vehicle. Like, that makes sense. I see people do solar liens sometimes. Like, I wouldn't suggest doing that. Because then when you go to sell, it's like you need to pay that solar lien off. And it's like, how much money are you really saving per month by having the solar lien? Probably not that much. And you have like an $80,000 lien on your house. And then when you go to sell your house, you're making no money off of it. Like, don't do that either. I wouldn't suggest doing that. But yeah, that's what I guess would and wouldn't do with the equity in your home.
Which I think that's what you said was really important. Use the money to invest it, right? To put it in the right place.
Mm-hmm.
So I'm going to ask Gisela, so what is the difference between just saving money and allocating it strategically?
That's my favorite word. Having like different buckets of money is always what I tell, the families that I assist every day. When you come to a place where you need an emergency fund, or you are, thinking about retirement, do you just want to stare at a Social Security statement? I mean, what is your comfortability with security in, just thinking of Social Security as an actual check, or in addition to perhaps, a 401k, which goes up and down, which is awesome. It's one of the different buckets of money that you should have if you want one, but it's not the only thing that you should have. And so what we are so structured, and I'll say that word, in our society, structured, meaning that we're told this is how the normal is that either you are working 40 years of your life to fund Social Security, or you are an employee hoping for a benefit package from a corporation or company that's going to give you a 401k, 403b, or whatever kind of, qualified retirement funding so that you can retire from that. And so it's either this or that. There's no other buckets of money that we have, that we're encouraged to think about. Like, for example, right, other types of investments that a financial institution can provide for you, other types of policies and planning that you can, come into that may even be income tax free, like cash value life insurance policies. Most individuals get life insurance through their work, not really understanding that if you leave that work setting, your life insurance is usually 90% of the time gone, unless you start paying it outside, but it's much more expensive. And there are many reasons why you may leave, change of jobs, but sometimes it's sickness. So good luck with getting life insurance, right? For $250,000 if you are a cancer survivor, right? It's very difficult to have financial planning after the fact, right? You have to really do it before, and it should be something that is structured from the very beginning. So if you're listening to us right now, what it basically means is you have to have multiple ways of having an income stream. You should. Let's think about it. You're spending 8 hours a day, 40 hours a week, right? Every single time, you spend more time at work than even your own home. Let's be honest about it, right? If you really look at the hours that you spend in your home versus the time that you are actually enjoying it, you're spending more time at work, the American dream is home buying, but it's also making sure that you have those golden years. You all know about the golden years. The golden years back in the days in the 70s and 80s, the reason that it was the nest egg, the golden years for retirement, was because they would give you a gold watch. Most companies, after years of employment, would give you a gold watch, right? So they used to call it the golden years. Pension plans were, wow, stellar, right? I wasn't there yet. I was probably like 2 years old back in the day, right? 2, 3, 5, 10 years old. But I heard about it. Do we have golden years now? I don't even know if it's bronze color or who knows, copper or whatever the color is now, right? But here's the thing. We can still do that. Now, what's happened is the transition from being the company's responsibility to being your responsibility. That's where we live now. It's our responsibility, right? And so I was in real estate and lending for many years. I did that in my 20s. I love real estate. I love loan. I think, thank goodness there is a way to purchase a home. Other countries don't have that, by the way, right? You have to have the cash, right?
Yeah.
Or you have to have 50% down. I mean, most other countries don't allow home buying like we do. So lending is good. However, we have to know how to use the system in our favor, right? So if I have a home, right, it's not about asset allocation, only creating that asset, but asset protection. And so in that asset protection is where we should start thinking about multiple strategies. Because when we think that way versus the other of just asset accumulation, and that asset allocation, we forget it, we miss it, right? The fact that we need to know how to strategically maintain and protect what we have, right? I'll give you an example. I have a lot of investors, as a matter of fact, as part of my, book of business that I've had for years. Investors usually, right, have a net worth over $1 million, right, or more, because they multiply their money. That mindset is there. But most of them will not hesitate that the moment that they acquire a property to have another life insurance protecting that. Something already, right? And from the rent that they get, they will not hesitate to make sure that it's working for them in another bucket of money. Do you see what I'm saying? They multiply their money. And it's so simple for someone that's still making it paycheck to paycheck. And this is my biggest part, because as you know, I don't know, a lot of people don't know that April is actually Financial Literacy Month. We celebrate it as a national month, right? In 2004, Congress passed this thing that said, hey, we need to bring financial literacy. So we dedicate a whole month, which is April, to financial literacy. So one of the major things and components is that it's available to us that are not that $1 million, $2 million, $5 million net worth. Then anyone can start doing something with as little as $20, $30, $40 a week. Come on, we can stop that Starbucks once in a while, right? And we could do that once a week and put that away with an interest rate that is making money for us. Banks make money on us all the time. All these loans are making money. They know and they understand it, but we can be our own banks. Let's bank on us. Let's start doing that. So Zara, I'm really excited, that we're taking the perspective of home buying, dream making, the American dream, which is so important. Let's make sure we secure that American dream with multiple ways of having income for us later on.
We can do what the banks are doing. We just need to get the right guidance. But one of the products that I like that a lot of people, they have this misconception about life insurances, right? People think that life insurance is only to your beneficiary. But there is also something that is called indexed universal life insurance. So if we kind of break it down in a nutshell, what exactly is an IUL or indexed universal life insurance, and how does it work?
Well, Index Universal Life actually started back in 1997, okay? And it was a new way of protection and cash accumulation. Historically, we had started with whole life, right? Whole life was very, very big at some point. It would allow someone to be covered for life insurance permanent policy versus a term, right? Both are good. It just depends. It's all about suitability, right? But a whole life was your whole life, right? And then it had this cash value account under it, meaning that from the premium payments, a partial amount of it would actually go into this saving cash value account. And this policy value would grow at a fixed rate, whatever the company would give. Some companies would even give dividends, depending on the company that you chose. Then something came out called Universal Life, right? And Universal Life was still the same kind of 3 to 4% cash value, but it had other things included. So then comes this idea that people really want to save, but they want to really secure their money. There was a lot of concern in the market. And, they wanted to see where they could put more money into this cash value, but also partake in the market more aggressively than they were doing. 3 to 4% wasn't doing it for us, right? I mean, when inflation at some point hit 8%, what is the 3 to 4% going to do? And we now know that things go up and down, that pandemics can happen, right? That things can go wrong. And so we had to create something new. And so I guess the big guys upstairs, those with the brains, they said, hey, why don't we create something that will now allow that cash value to actually be included in the index market, right? That's the S&P 500 and other indexes globally, depending on the allocation of whatever carrier you choose. So think about that. Now you are actually participating in a market that is hot, that's part of these other investments out there, like mutual funds and 401ks and for all that stuff, right? But now we put it under the umbrella of a life insurance. And there's a TAMRA Act of 7702, IRS code 7702, that says anything under life insurance is actually income tax free. Right. And so if I have a $250,000 life insurance policy, just as a whole individual, right, policy, I get to leave that to my beneficiaries income tax free. Well, because the cash value policy has that, it's under that umbrella. Guess what? Everything that grows inside a life insurance now turns into income tax free ways of me taking it out. Right. As an individual that has that policy, I can withdraw it or I can loan it out and it's completely income tax free. What a concept. Yet many few people know about this. Many few people. And there are books about it. Go on to Amazon, right? Shout out to Amazon right now. They didn't pay me for the advertising, but you can find these books, right? All these books about the golden nest egg. The golden nest egg is back. But like I said, it's no longer under the responsibility of an employer. It's now under the responsibility of us. And that's our golden nest egg. That IUL, personally, my personal opinion, because I've owned one for years and my whole entire family owns one, it is probably the best kept secret of the wealthiest people in America. Because the wealthiest people in America have had cash value policies for generations. That is how they have transferred wealth, protected wealth. Estate planning is done around these cash value life insurance policies under IULs and all that. You got to get into the know. So I love IULs. You can take that income tax free out. You have the ability to grow your money based on the market. And then lastly is you can secure the gains inside that policy. So in these moments of times where we've had here now, the dive in the markets, and a lot of people are going like this, right? They're scringing like cats. They're like, oh my God, things are going badly. The thing is, we don't know. Tomorrow could be amazing, right? Monday could be amazing week for the market. But how many 55-year-olds can say, oh, I can ride this? Not a lot. And so they need to have a safe space, right? And you have to diversify. Get risky if you're in your 20s, that's fine. But also have something that is secure, that you can count on the long term as well. So this policy fits everybody, because what happens is when the market dives, guess what? You can actually lock in whatever gains you have in that policies are. You're not losing a dime from the money that you had. Always paying your premium. You're right on track to making a lot of money later.
And the good, what you mentioned, it has that cash value. So how can someone benefit from an IUL? Which comes to my next question, like, how can we use that in real estate as well? I think that goes to Anna later, because when you use money for real estate, it's kind of tricky, where the money's coming from. But
Yeah.
but yeah, how what could be a good example of using that? Because people think about the life insurance like, yeah, I'm gonna leave that to my beneficiary, but you can use that money while you're alive, that cash value, based on how the market is is increasing your assets there.
Well,
So-
does it protects your asset, right? I'm still learning about, the life insurance thing that you guys are explaining. It's kind of new to
Love
me.
it.
I don't have a policy like that.
You should.
I know I probably should. I do.
All right,
I
there we go.
don't, but
I felt the same way. I didn't have one when I was in real estate making over 6 figures. And I was like, what? Hold on. I've been missing out? What?
well, it's because it's just me. I have 2 dogs and I don't have like a family or anything. And I was like, I think about it as
Exactly. I'm glad you brought that up, because
You know what I
sometimes
mean?
people think life insurance is only if you have an actual family right now. And that's fine. It's true. But not with the cash value ones, because you can have a very small life insurance and huge cash value. Do you see what I'm saying?
Yeah.
Just so that you can have that income tax free.
yeah.
So
Yeah.
can someone use that, like if someone wants to use that as a down payment, would that be an issue?
Can you repeat that? What do you
Can
say?
someone use the cash value? Let's say someone has that
Yeah,
amount.
if they can pull it out, if they can use it,
Yeah.
anything that can be like turned into like liquid cash, like I can use. They can use to go
Unsurrenderable value? Definitely, Zara.
Yeah.
Yes. Mm-hmm.
So do you see, these are things that people don't know, and you could
Yeah.
actually save money faster for a down payment. Probably
I've
with
had one. I've had one actually. Yeah, I had one about 17,000 or so. They took out of their, index universal life policy to purchase, to help with the down payment of a property.
Yep.
And this was a young couple. When I did it for him, he was not married, by the way. He was just a young 22-year-old stud. I used to, right? And he was not thinking of doing this. But guess what? 13 years later, right? He was married, and he's like, hey, I have that policy and I have money in there. Can I do something with it? Can I take it out? You said yes, right? Yes, you can. And now he was using it. So it's what, for whatever happens later, is that money, because things change in our lives. So yeah, it's a great way, especially for young adults, to start saving through there, because you have, on average, the index market in average has done about 10%. I mean, there's no way it beats any CD out there long term.
And a lot of young people, like I remember, when I was younger, I didn't know this. I didn't know a lot of the things I wish I knew. And you try to tell young people these things, and it's like they think this is for my retirement. I don't want to talk about it. This is when I get older. So for example, annuities, right? Annuities are, people hear of annuities, or like 401ks or 403bs, but I'm leaning more towards annuities. So, and either tune out to or think they're too young for it. So why that myth? How can you explain that to the young generation? You gotta think right now. This is something that you can build right now, so you don't have to think about this later. How can you explain that in a better way to a 22-year-old or 20-year-old, even an 18-year-old? I think that would be the perfect age for it.
Well, the thing I love about ILN agency is that we cater to all ages, right? And a lot of our agents are fully licensed. They have securities licenses. They have life and health. We're full brokerage. And so we can come to anyone at any age group and really offer them suitable products, right? What we don't do is turn anyone down because they don't have enough money, because they're too young, because they're just starting, or they're too old, or too sick. Do you see what I'm saying? And so I think that when suitable, we look at products that are going to fit that age, and also their economic background, because there could be a very broke 22-year-old, and then there could be a very wealthy 22-year-old, right? Mm-hmm. And that's a different angle that we have to really talk about. So I do want to say that let's just talk about our middle-class families. Most 22-year-olds are not going to think about saving money. Let's just say that, because we know, right? Let's talk to over the weekend, let's talk to our 22-year-olds. That's the problem. Do you see what I'm saying?
Mhm.
It's a problem. I'm concerned about that. I want the 22-year-old to be looking. You know how much they Google and they're checking on TikTok and all. How many 22-year-olds are talking about in TikTok, oh, I got to save money. I got to invest money. Do
No.
you see what I'm saying? They're not.
Mm-mm.
We need to change that. That's what ILN is all about. We need to change what's disrupting the wealthiest potential that most young people have the ability to. So like you said, there are different ways they can get into an IUL. You know, if they suddenly come into money and they're a wealthy 22-year-old, hey, we can talk about variable annuities. We could talk about anything, right, for them. You know, professional money management on their money, things that we can purchase. But the younger you start, the better. So if you're a parent listening to me and you're loving this thing, which I'm sure they are, because I'm loving just listening to all of us here, is you've got to make sure that you talk to your young kids. Don't think that they're going to just not, you know, ignore you. Give it a try. It's worth that. That is probably the best legacy that you can give to your kids, is for them to be more heavy on making sure that they are saving. I wanted to say that what I love most about my profession, and the reason I love being where I am at, coming from real estate and lending, which I did do for many years and referred a lot of this business, which is awesome, which I love that part, was that I was able to teach my children and my family about finance because I was in it. Do you see what I'm saying? Yeah. So my 30-year-old, she's 29, but she's going to be 30 soon. She has more money saved than I even had, even in real estate, making the money that I was. She has more money saved than I had at the time, because I started her very young. And then I showed her the magic of actual financial planning. She is making better choices than I did at that age. I'm so proud of that. I'm so proud of her. And she has multiple buckets of money. I put her in front of many different financial advisors, you know, that we have at ILN. And I'm continue to encourage her. And she's always, always recommending this to her other peers. And they're starting to do it as well. And so we need to make that change. And we can. We just got to show them. Zara, we just got to show them. That's all.
And that's a great legacy to leave.
Oh, yes.
That
yeah,
alone.
for sure.
Yeah. And so this is when it comes to my question, like, you know, this banks, when money is in the banks, right? That is something that a lot of people don't understand, right? What is the difference between this index, I believe index and fixed ones, right?
Yeah.
Which people don't understand that. And I think that's crucial, because the majority of the population they know 401ks and 403bs, and they don't even understand what's going on there. I have a 403b, I have a 401k, but I don't know. I don't know what I have there. So, but the majority of this life insurance, this annuity, can be indexed, which is so crucial. And that's what actually puts you on the safe side, right? Which is talking about not putting all those, you know, those eggs in one basket.
Well, you know, fixed index, fixed annuities or anything fixed is that there's a declared interest rate, and that's what you're going to get. So it's a guaranteed way. And that was very popular at some time because some people don't want to get into risky investing, right? It's kind of like in lending, right, Diana, where they want a variable loan, or they want a fixed loan, right?
Oh yeah,
adjustable,
right?
Right?
An ARM or a fixed rate. No one really wants an ARM right now.
They do have that in loans, right? Like I remember actually, I studied for that test.
Back in the day, I think, but now it would be like suicide.
Yeah, right. Most people aren't getting ARMs right now unless they're like fixed for 5 to 7 years, and then
right. So it depends on what you're putting your fixed into, right? Now I feel that with inflation where it's at, and inflation has a lot to do with this. We as financial agents really do look at inflation, and a lot of the financial planning that should be done should have an inflation protection. I think that's a very important question when you're speaking about where you're going to place your money. But fixed rates are also good in some cases, right? Short term goals like a 3-year plan or a 5-year plan, which also exists. A fixed might be the only thing that we could possibly do, right? And, so those options are available as well. So I think I always go back to suitability, and we're big on that at ILN. We're not just, a cookie cutter. We really don't want to have people think that this is all we got and we just got to force it down your throat. It's like, no, we're really going to take our time to see it. And I think Diana does the same as in lending, right? I mean, that's what makes us good, right? That we can look around and take our time to see what best fits the client. So yeah, I mean, it's just really based on what it is that they're looking for.
So it's like, so index, so all these products that are called index, that means, you have all these stocks, little pieces of everything in one place.
Yes.
And it kind of makes it grow faster. So
it does help a lot better in the growth because you are taking the performance overall, right? They say it's the top 500 companies. And when a company goes down, it replaces it automatically. You don't have to be singly kind of doing the allocation like if you were going to buy stocks, right? And I admire any stockbrokers or anyone who does these stocks things they purchase. I'm like, wow, you must be awesome, because you did take a look at all the reports, and then you got to make sure you look at here when you're in an index, it's all put into one. It's situated in a way that you don't have to worry. It's the top, right?
Yeah.
And that's the purpose of having an index account versus separate stock options and stuff like that.
So for Dion and Cherry, so let's help everybody here start their wealth map, right? So what is the first step they should take tonight, after all of this, from your perspective and from your side?
From our perspective. Okay. First thing I think they should do is ask the question. They should ask the question, what do they want for their future? I think that's one of the bigger ones. As far as getting more knowledge, the people on this call are perfect people to reach out to learn more about your finances. Reach out to myself, Zara, Gisela, Diana, and just ask some questions. I think a lot of what goes on today is they want knowledge, right? But they want to get it in a manner in which they don't have to talk to people. And sometimes you need to talk to people with the experience to really get the real knowledge passed on to you and to learn something new. What do you think?
I agree. And that's one of the things that a lot of people make mistakes. Google and TikTok and all of these things on social media, there are good resources out there, but it takes too long to dissect it to get to the real meat of it versus speaking with someone or going to an organization that they have the knowledge that you need. Because of the fact that everybody's on this microwave mode of I need it fast, I need it now, why not go to someone that already has that versus you saying, well, I can look on Google, I can just Google it, I can Google that, or I can see if there's something here or there. No. And also one of the things that we learned in our past is sometimes your aunts or uncles or cousins or whatever may know some stuff, but a lot of times that's them passing on something that they heard, but they didn't research it to make sure that it was fact or that it was true themselves. So the best thing is to go to someone that has that knowledge, the SME, subject matter expert, or someone that has that knowledge or has that experience, like all the experience with you all, to say, yes, I've experienced this, or I've researched it, or I've passed this on or provided this help to someone else.
So in a nutshell, find a professional.
Yes.
Yeah. Like G said from the very beginning, right? You do have a hairstylist, you do have an accountant, you do have you do have all of that.
A great loan officer, a great realtor.
You need a financial
professional.
Yeah, and a financial professional that helps you to allocate your money, because this is the thing, people work so hard and make money and try to save money, but they're not thinking about inflation and the downsides of the market. And that's what matters when you are allocating your money properly. So you're making money, but you don't think about 5 years later or 10 years later. So the $100 that you have right now in the bank, 10 years later or 20 years later, it's not going to be the same. So while you have your money in the bank, it's not increasing according to inflation. and it's not taking into considerations the downsides of the market. So you need to put it where that percentage actually higher than where, than this bank accounts or CDs or savings accounts or all of these things that, 1% doesn't give you much. It doesn't catch up with inflation.
Yeah.
So if someone is ready, so this goes to everyone, if someone is ready to flip the script, right, on their finances, what's one step they should take in the next 24 hours?
I think they already know that answer, but I will tell them in case they're confused. You really need, like Dion said, you need to seek a financial professional. One thing I will say, in celebrating financial literacy is that the concept, especially around my Latino community, right? Because I'm an immigrant. I came here at age 7 and I wanted the American dream. And I see it a lot in my community, is that we all think, and I include myself in it, because when someone approached me 20 years ago and said, come and meet with a financial agent, I have someone I want to introduce you to. And I was making over 6 figures. I was making money in real estate. I had my own real estate company, lending. I thought, and I told him, I remember clearly, I said, Tony, that's for people who make over $1 million. I'm not a millionaire yet. That's what I said.
Mm-hmm.
And so we have this misconception that financial agents only work with wealthy people. And that's not true, at least not through what we do, through ILN. We want to bring what wealthy people do down to where we need to do it now so that we can become wealthier. See, there was one person, one brave soul in that whole generation that took a chance and started planning. That's what we forget. Someone did it right. Someone started investing in real estate. Someone opened up their business. Someone did something. Yes? Right? We need to be that person. There's got to be one brave person in that family that says, I need to be the person that's going to bring a legacy to my family. And that's what financial literacy is about. It's not about going to buy life insurance or starting, investing, all these things. This misconception of spending and wasteful, thinking. It's about one brave soul saying, I need to create a trend, right? We're all into trends now, right? But an actual trend of education, of doing the right things from the very beginning and making a real disruption, like you just said, right? And forgetting the banks being the only source of financial institution that exists for us. Right. We think the banks is where we got to go, and we settle for that 1%. Don't settle. It's not meant for only you, okay? This isn't for you. It is a place where we store our money. That's it. Your money needs to be working for you through the Rule 72, through the compound building. And it's definitely ready for you, because the industry, the financial carriers that are out there, they are creating and continue to create every day plans that are available to our middle class families. Even to the poorest, they can still try to do something. Let's not leave our families behind. I have offered life insurance for $20 a month, $25 a month, $30. I will spend more on a dinner nowadays than what I will spend on a life insurance. Yet I go see GoFundMe everywhere. I go on Facebook, GoFundMe are everywhere. GoFundMe takes a certain percentage of all that money that's gathered, by the way. It's a business for them, okay? My respects to them, I get it. I understand. But GoFundMe is a business. So still you're partaking in a business when you could have done it, your business, to take care of your family. And I'm being very straight and blunt because that's my job. See, I'm a financial doctor. You go to your doctor and your doctor says you have high cholesterol or you're pre-diabetic. He's not going to sugarcoat it for you. He's going to say either you exercise, lose weight, or you're going to die of a heart attack or a stroke or something, or you're going to lose a leg. I mean, that's how it is. Their job is to be very blunt. My job is to do the same, but I do it with a smile. And you got it. Something. Right?
So the next time you right? Black house and they want to apply, then you don't get this disorganization for Diana.
Yeah. So they know what they got to do. They got to call us They got to talk to us. They got to talk to Zara. They got to talk to all of us here, right? And they got to start planning. And what I do promise you, I'm sure Diana does the same thing when she talks to somebody, is we are going to do the best we can to help you wherever you're at,
But
whether
we
it's
cannot
now
do
or
it
later.
Yeah, we cannot do it without the initiative and the effort and their help too.
Exactly.
Because it's like, when you're trying to help an addict, right? I'm trying to help you right here. But if you don't put the effort and if you don't do your part, there's nothing I can do for you.
But here's the good news. The good news is that in our industry, and I've been at this a long time, it is booming right now.
Mm-hmm.
That's the good news, is that the middle class is just on it right now. They're on it. They're like, okay, we are getting, ILN is exploding throughout. Shout out to Tennessee, right? Our corporate office is in California. We're a national company. We're everywhere. So it's like so many people are coming into the industry. So many people are asking for our help. I've never been as busy as I am. It's awesome. It's a blessing to do something every day that creates a legacy. I will pass on, but what I leave for them planned for my 20, 25-year-olds, do you understand that, right? That I will pass away, but my 25-year-old, when they're my age, right? When they're actually my age, they will reap the benefits of what I did for them. That means a lot to me. I love my career. So if you're listening, get it done. Let's go. Let's do this. It's the year of prosperity, and that's what we're all about. And Sarah, thank you so much for doing this. And to all of you guys that are here sharing your knowledge and stuff.
We should do more of this. So I put all the information right there on the screen. But if you want to tell anyone to reach out to you, you can reach out to Diana Flynn.
Yes, please.
So you can tell us, please, Diana, tell us your phone number, your email, whatever they can reach out to you.
Go ahead, Diana. Yeah.
My number is 614-560-3871. You can call or text me. I use my personal number. So, and my email is on there.
I'm sure which one. and G, please tell us where they can find you.
Well, I'm all over social media, but you can also reach out to me, 818-261-4807. And do follow me on social media, Instagram, Facebook. That's my name. Just type my name. You'll find me. We always are posting different webcasts. We're posting invitations, events. We're very, very involved in the community. And if ILN can come to your community, let us know. We're there. We've got great people. As you can see, the quality people that we surround ourselves, just by hearing those that are here right now, you can tell what we attract. So we want to work with you. Let us help you. It's time.
Thank you. And Dion, how they can find you now that you're part of the team?
My number is area code 615-947-3330. And if you get in touch with me, I'm definitely going to get you with G and Zara so that we can get you on the right path.
Thank you so much, guys. I appreciate it. We have to do this more often. I think people can benefit so much from this.
I loved it. It was awesome.
Yeah. And, hopefully we can do it sometime soon, another time. And, good luck, everyone, and enjoy the rest of your weekend.
Awesome.
Bye, everyone. Have a great
weekend.
Blessings. Bye-bye.
Bye.